$100 million of gold in your pockets, right?
Right.
It's not going to happen. So ultimately, this is why the gold standard failed in 1914, and why gold reserve standards, they just don't work. The reason the Bitcoin standard will work is because the custodial rights of 5 billion people are unprecedented. There's never been a property in the history of humanity that gave the people more custodial rights. You know, if you have a $50 Android phone in Zimbabwe, you can walk around with $10,000 worth of Bitcoin in your pocket and nobody knows you have it. And even if I hold a gun to your head, I can't, if I shoot you, I'm still not getting it. If I firebomb your house, I'm not getting it. I can't take it away from you. And if you have 1 minute notice, you can zap it. You know, the people that own more than 50% of their portfolio in gold are idealists, but the problem is gold is a defective asset on a non-existent network. Why is it defective asset? Well, I mean, it peaked in the 19th century, but it's not thermodynamically sound. You can make more gold at the nature level. The miners keep dumping gold on the marketplace. They spend $100 billion a year to dump gold on the marketplace. The difference between that and Bitcoin is Bitcoin is capped at 21 million. Gold is infinitely increasing in supply. I mean, the second reason it's defective is because there's like 90,000 tons of gold sitting in jewelry. So whenever the price goes up, people melt down their jewelry and they recycle gold to drive the price down. The third reason the asset's defective is because there's no protocol to synchronize paper gold or the gold applications at the banking level with the underlying physical gold, which means that paper gold or gold derivatives can short the physical gold 100x or more. That means that as the price of gold goes up, gold bankers and gold sellers keep dumping more gold paper on the market to hold the price back. So I would say gold is hopeless. It's really a tragic, hopeless asset. And I think that the people that are buying it are getting misled by promoters. Most of the promoters get a commission to sell it, or the gold miners are making money selling it. But you know, think about it for a second. If I passed a law making gold mining illegal everywhere in the world, what would happen to the price of gold? It would presumably go up, wouldn't you think?
Yeah, it would skyrocket.
Okay, well, the point is Bitcoin is capped. And so gold is competing as a sound money store of value against something which is capped. Gold is a commodity. Commodities don't hold value, right? You might as well invest your money in wheat or corn or coal or oil. At the end of the day, the reason they don't hold value is when the price of the commodity goes up by a factor of 10, everybody on Earth scrambles to invest in more machinery, more manufacturing capacity, and they recycle and they dump and they short the commodity. That's why it's a commodity. If you want to, you don't really want to store your money for 100 years in silverware or something that's used as an industrial metal, or something that's gold and silver used as industrial metals. If you want to store your money for 100 years, you want to put it in a pure monetary asset which cannot be debased or inflated or manipulated. The thing that's special about Bitcoin is it's an asset plus a network plus a protocol. The asset is capped at 21 million and is only going to shrink. It can never go up. People can lose their Bitcoin, but they can't create any more. The network is an open network, which means I can move a block of $1 billion of Bitcoin from here to Tokyo in an hour for a few dollars. And that'll eventually be moving $10 billion and then $100 billion. So it's a very powerful final settlement network. If you wanted to move $1 billion of gold from New York to Tokyo, you're talking 3 months and $5 million. You can't. So gold is tragically centralized. There is no network. And then there's no protocol. The protocol of Bitcoin means PayPal can integrate 330 million mobile phones into an underlying Bitcoin network and keep them synchronized with integrity. you can withdraw your Bitcoin off the custodial exchange, and that means that the exchange can't go 100x naked short on the Bitcoin. If they do, there's no fractional banking, or it's fractional banking at your own peril in Bitcoin, because look, my company doesn't have 2.5 billion worth of Bitcoin. We have like 5.5 billion worth of Bitcoin. We can take it anywhere we want to any exchange in one day. So if you were to, and we got it in cold storage. So if I had $5.5 billion worth of Apple stock, then the bank could short it and lend it out to drive the price down. If I had $5.5 billion worth of gold, it'd be sitting at a bank, and other banks and bullion bankers will write derivative contracts against it and short it, and they're working against me. So the problem with gold is the gold miner, if you decide to invest money for 100 years in gold, the gold miner's your enemy. He's going to take 90% of the value by inflating the price of gold. The gold banker is your enemy. They're going to hypothecate it and dump derivatives. And then the government is your enemy. If gold gets too high, they're just going to sell their reserves or short it or seize it, because